What a turn of events, guys. What a turn of events. We got to break down what's going on in the stock market. Of course, we got to break down some individual stocks, some charts, and we got to break down some earnings. But before we do that, make sure to get your free money from Moomoo. Up to 6 free stocks, each up to $3,500. Just use my link down below or go to stocksurfest.com/Moomoo. Deposit at least $100 and boom, you get your free money. And with that being said, guys, cheers. Take a sip of your coffee. You're going to need it for this one, and let's get right into the video. So funny enough, it is 4:20 right now when I'm filming this video. When you're watching it, it's probably about 7 or 8 p.m. on the East Coast, but funny enough, it's 4:20, and the reason why that's funny is because Elon Musk today, he bought Twitter at $54.20, and we will talk more about that later in this video. But before we do, let's break down what's going on or what happened today in the overall market. So if you guys recall, this morning we were deep in the red, and it seems like right around 12 on the East Coast, roughly, right around noon is where SPY started reversing, and Triple Q, it was probably the same time, right? Yeah, right around 12 is when it started ripping upwards as well. So we were deep in the red, and this goes to show again, it goes to show how volatile the markets are, which I've been saying this like crazy, right? Every freaking day I've been saying this. We were deep in the red, and then we ended up closing up pretty nicely. I mean, the NASDAQ 100 went up 1.3% on the day. The Russell went up 0.7, and we had the S&P up 0.6, the Dow up 0.7, same as the Russell, and we had the VIX. It was up over 30 at one point. It was up 7-8%. The VIX went down. It closed down 4% on the day, and we had gold down about 1.8, silver down 2.2%. Like I mentioned in my previous video, today was not the best day whatsoever for the metals, and maybe we'll talk about that in another video, but I don't really want to focus on the metals in this video. So what we're noticing on the 5-day chart on Triple Q and on SPY is both of these are now going from a point where they were under the moving averages on Friday and on Thursday to now they're back over both moving averages, and we're actually seeing a golden cross as well, both on Triple Q and on SPY. So that's very good overall in the very short term for the bulls. But if you pull back a little bit on the 10-day and maybe on the 20-day chart, what you're noticing is on the 10-day chart on SPY, we're still under the 180 moving average. I'm assuming Triple Q is as well. So what that means in a nutshell is this is not out of the woods yet. You guys can see here 10-day chart on Triple Q, and on the 20-day chart, we're clearly still in a downtrend, and you can make an argument that this rally that we saw today, it's strictly a relief rally. You can easily make that argument because Thursday and Friday, we got hit with the double whammy, guys. We got hit with 2 back-to-back bloodbaths, so we were bound for a little relief rally, whether it was today, tomorrow. We might even rally for tomorrow, through tomorrow and Wednesday for all we know, considering how rough Thursday and Friday were. So we were due for this, and again, you can easily make the argument that this was a relief rally. So that's kind of what I'm thinking here, guys. We got to be very careful we don't get trapped in on Triple Q here under 338, 340. That's right by the 180 SMA on the 20-day chart. At that point would need to break, in my opinion, for a reversal to at least start to occur. And for SPY, let's see what level that's going to be at, right around the 180 SMA at about 437, 438. That level needs to break, which is about $10 higher from where we are right now. So be careful. All I'm saying is, yes, the markets were fantastic today. They were green. Literally all the stocks on my watch list, for the most part, were green today, other than a couple of them, a handful of them. It was a great day, but just be careful because this could turn like that. Just like I've been saying in all the videos, guys, the markets are very volatile. So what do you think? Drop me a comment down below, and if you haven't done so already, make sure to smash that like button and consider subscribing, as we're about 70 subscribers, 80 subscribers roughly away from that milestone, 25,000 subscribers. So I'd really appreciate you guys, as always, if you did subscribe, and just in general, you guys are awesome for watching, rocking with me for, however long you've been watching the videos. You guys are awesome. So let's go over now the elephant in the room. Elon Musk, Twitter, what the heck ended up happening. And we did talk about this earlier today, and that was a couple of hours ago. And since then, we got the decision from Twitter's board, and we got news. I mean, we had news this morning. I'm talking early this morning, that they could come to a decision as soon as Monday. And fast forward, today's Monday, and they said that today, Monday, and they worked through Sunday night. Fast forward a little bit, it's later on Monday, and the deal is official. The Twitter's board accepted Elon Musk's offer. I think it was for about $42 billion, and again, $54.20 per share. And they're going private, guys. They're going private. And the stock on that news, I think that's the piece of news that came out when I was filming my video. Literally, when I was filming my previous video today, guys, it was at about 12:30, roughly 12:25, and I pulled up Twitter stock, and I didn't know because at that point I was filming, and it shot up all of a sudden, and I guess that's exactly when we got that news. So yeah, it shot up, and it's been uptrending, riding that trend ever since to close off the day, and it ended up going up about 5.6, 5.7% on the day, and it seems like the breakout here is continuing. It's above the moving averages on the 4-hour chart rather, and it's clearly above the wedge as well. So at this point, $54. I think it could be going there, whether it's tomorrow, later this week, maybe at some point next week. I have no idea, but that is where this momentum could take it. And remember, they also have earnings coming up on the 28th, which might not be that, those numbers might not be that great. Maybe that's why they ended up selling it to, Elon Musk. Twitter's board made that decision before the earnings because maybe they know something's not looking good in the pipeline for the next couple of days. So what do you guys think? And by the way, I'm not long Twitter. I don't plan on buying it. I'm just here with my popcorn, enjoying the show, and it's been a good one to watch. And now officially, again, Elon Musk owns Twitter. It's crazy. It's crazy what capitalism and people can do. If you have the money, you can pretty much buy whatever you want at this point, And Elon Musk is, of course, there's loopholes and crap you got to go through, but he did it. And he just spent about 45 billion, whatever the final number ended up being, to buy Twitter. So kudos to him. That's pretty cool. We also had Coca-Cola to shift gears a little bit today from Twitter, Elon Musk, to good old Coca-Cola. They reported earnings this morning, and the stock did pretty well. It went up 1% on the day, closed a little bit under $66 per share, and I believe this did hit an all-time high. Yeah, right around $67. I guess exactly at $67.20 is where that all-time high was hit, and they did EPS of 64 cents versus 58 cents. Estimated revenue came in at $10.5 billion versus $9.83 billion estimated. So nice double beat from Coca-Cola there. And they see full year 22 organic revenue growth of around 7 to 8%, which is also pretty solid considering Coca-Cola isn't a huge growth beast anymore. It's not at that point of its business cycle, right? The life cycle. And they also see full year 22 adjusted EPS growth of around 5 to 6%. So they're still growing, guys. And I said this on my Patreon video this morning. By the way, check out my Patreon. Shameless plug if you guys want to join that. That is linked down below. You get all my buy, sells, call outs, morning videos, all that good stuff, plus more. Check it out. Link down below. I mentioned how Coca-Cola, they have pricing power. They're able to ride out this inflation storm. Oh, inflation is what? 8, 9%, 10%? No problem. We're going to take our sodas, and let's say individual sodas here. They sell the bottles. We're going to take those from $2 to $2.20. No problem. 10% markup. And I guarantee you, this is what they're thinking. And of course, we all know this. I'm thinking this myself. They're thinking, okay, people are still going to buy the Coca-Cola, whether it's $2, $2.20, people are still going to buy it. So they have pricing power, which makes them, again, able to ride out this inflationary storm that we're in. And it looks like investors kind of know that, right? They've been pricing that in. The stock's been on an absolute freaking rampage since the middle of March. About a month and a half ago, it went from $57 to $67, guys. We're talking a 16% move in a month and a half. And Coca-Cola is not a growth beast. It's not some of these companies' stocks that can go up 30% in a month. It's not that, guys. So that makes it even crazier, the fact that it went up 16%. So Coca-Cola is ripping. And to be honest, I am more on the cautious side here. I'm kind of noticing a bearish divergence on Coca-Cola here on the 4-hour chart. We're noticing RSI's weakening, stock just at an all-time high. So if this collapses a bit, and let's say it starts coming down to about $62 a share, maybe right by the 180 SMA, or even a little bit lower, $60, $61, whatever. If it starts coming down a bit, get that RSI down a bit as well, more towards the oversold side. That is where I'd consider getting into Coca-Cola. You know, if you're already in it, or if you were in it since March, I'm not a financial advisor, but if it were me, I'm just going to be honest, I'd be locking in profits right now. So if you're already in it or you were in it, kudos to you. You nailed it. But for me, since I'm not in it, I wasn't in it, I'm just going to be patient with it. There's no need to jump into it at these levels. The risk reward for me is just not there yet. But again, if it comes down to 58, 60, 62 a share, then I'd be like, okay, now I'm going to consider it. It's a little bit more worthwhile. But until then, I'm being patient. Like I said, the next stock here is Activision Blizzard, ATVI. EPS came in, and mind you guys, these numbers were not that great at all. EPS came in at 64 cents versus 71 cents estimated, which missed. And they did revenue of actually, no, that's the wrong company. That's next, guys. Well, let's not get ahead of ourselves now. They did revenue of $1.77 billion versus $1.82 billion estimated. So Activision missed EPS. They missed revenue. And the crazy thing is, last year in the same quarter, sales were $2.28 billion. So they're down about 400 something million year over year in sales. And EPS was at about 95 cents. So they're down about 30 cents per share in EPS, which is just not good. So year over year, Activision is getting thrashed at this point in time. And if you guys are Call of Duty fans, I know some of you out there are probably are watching this video. I used to be way more like a decade plus ago. I still play a little bit, not really, to be honest. But the new one, the Vanguard one, I tried the beta months ago. It was all right. And it's the biggest flop ever. So that's been a rough thing for Activision, no doubt about it. I mean, Vanguard has just been a complete flop, right? To the point now, I think they're giving the game away for free. Last I checked, I opened my Xbox one day. I think it was like 2-3 weeks ago, or maybe a month ago or something like that. And it said, play Vanguard now, free or something like that. I was like, so they're giving this game away for free now. And I just started laughing. So yeah, Vanguard, complete flop. And I'm not sure how the other games are doing in terms of, Activision's core games, but, that's rough. And on top of that, they're getting a new CEO, or they got a new CEO already, and there's problems with their culture. So there's no doubt about it. This is going through a turnaround phase, or it's kind of like a comeback story. They just got bought out by Microsoft. New CEO, bringing in the new CEO, culture shift is trying to shift the culture. There's been a lot of problems there, turn around Call of Duty because it's just been awful recently. So, a lot's going on with Activision, guys. And again, those numbers are down year over year. And I mean, obviously 2020, 2021, those numbers were skewed a little bit. We get that. But still, I'm just pointing out the facts that they are down year over year on EPS and on revenue. So the next one here is Whirlpool, WHR, guys. Whirlpool Corp ended up reporting earnings after market hours. The stock went up 2.9% on the day, closed a little bit under $180 a share. And by the looks of it, guys, it is now down about $5, a little bit over $5 a share in the aftermarket hours. So Whirlpool, it was up in the at the close. Now it is down about what it went up on the day. So pretty much gave back all the gains. So Whirlpool ended up doing $5.31, and this makes sense why they are going down after hours, guys. They did $5.31 EPS versus $5.36. So that wait a second. Oh my goodness, guys. No, I'm wrong. The stock's now up. Wait. So it closed at 178. Look at this. It went down to 164. So it lost about 8%. Now you're telling me it's at 181. So talk about a roller coaster ride. So, well, I guess I was right. It was down, but now it's ripped back over. Now it's up about $3-4 after market hours. So the missed EPS 531 versus 536, and revenue missed as well, 4.99 billion versus 5.32. So they double missed. The stock tanked 8%. Now it's up about 1.5-2%. This is freaking wild, guys. And just like Coca-Cola, guys, I mean, Whirlpool is not one of these growth beasts to the point where it could swing up like crazy. It's nothing like that. But either way, it's moving, guys. It's moving. And on top of that, they missed EPS revenue. They also lowered full year EPS guidance, which is not good. And they see full year 22 revenue growth of 2-3%, which I guess that's probably in line with what people expect. So I guess one thing you could say is Whirlpool stock has been down very aggressively down, in the past couple of months. It's down 27% from that 245 high, which was hit in the beginning of this year. So you can make an argument it's down so much. Earnings weren't a complete devastation. So, I mean, they were bad, but not a complete devastation. So it might be seeing a little relief rally, because now earnings are over and maybe, it's a sigh of relief for the stock and it's running up a little bit. So we'll see how that goes, guys. If this takes out the highs from last week at about 183, I'll put my alert there. Maybe at that point we can watch it, maybe for a move up towards 190, right around the 180 SMA on this 4-hour chart. Another one here. We have 3 more. Make sure to smash that like button if you haven't done so already, and subscribe. I really appreciate you guys as always. Now, let's talk about the next one, which is Marathon Oil Corporation. This stock went down 3.4% today. A lot of energy stocks did not do well. Exxon went down 3.3%. We had Occidental Petroleum down 3%. Crude oil itself went down about 3.4%. It's down about 3.5% now. And it's at about $98.50 a barrel. So not the best day for oil, energy. And again, going back to MRO, even though it wasn't the best day, this chart still looks pretty good to me, right? It still looks pretty good to me. We hit $28 last week, just on Thursday, guys. No joke. $28 on Thursday. And in 2-3 days alone, this stock went down 18%, shedding off about 18%, shaking weak hands, profit taking, whatever you want to call it. And what we're noticing is we are still holding an uptrend. We're still in this uptrending channel on the 4-hour chart, and we actually got buyers stepping in. We started getting them at about $22.80, and we ended up closing over 24 a share. So pretty big intraday rally today for Marathon. It went up about 6% intraday from that low to where it closed. Not too bad. And let's see on the 10-day chart. Maybe the 5-day chart we got to watch. Yes, perfect. Right here. If this thing breaks out of, let's say, 2450, which was resistance all day if you're looking at pre-market as well. If we break 2450 on Marathon MRO, guys, and the 180 SMA here, that is where we could start getting a reversal, maybe back towards 2650, 27, maybe even higher from there. So watch out for MRO, Palantir, PLTR, even though this stock gets bagged on all the time, which me personally, full disclosure, I don't own any Palantir, but it gets bagged on a lot, let's be honest. And I'm not looking at it necessarily as a long-term investment. I'm looking at it as a trade, because this chart right now, and mind you, today it went up 1.2%. This chart does not look bad. I mean, we're clearly holding an uptrend. We're in this uptrending channel. We are under the moving averages, which I guess is the only bad thing here. But if Palantir could take out, let's say, $13 right by the moving averages on the 4-hour chart, that's actually slightly above the moving averages. But if this could break out of $13, guys, we can make a shot towards $15, $16, especially if those highs, we break the highs, which we have done in the past, in this channel. So, yeah, I'm going to be watching Palantir. I'm putting my alert at $13. Again, I already did that. So if we break out of that, those moving averages heading into earnings in early May, I mean, this could be one worth watching for sure. And the last one we have to watch, guys, is Southwest Airlines, which is LUV. Let's pop this up. Southwest today went down about 0.9%, and it's come down a decent chunk in the past 2 days. From, let's see here, $50 is where it peaked, and it hit all the way down to 45 today. So it lost 10% roughly in just the past 2 days, which means it got into a very brief correction, and rightfully so, considering this stock was at $40 on the 11th of April, and it ran all the way to $50 on the 21st of April. So in 10 days, it ran $10. That's $1 a day, guys. That is 22 percentage points. That is about 2% on average per day is what LUV ended up going up, right? And again, it needed that pullback. We got the pullback. Now we're right by $45, which was the high from the beginning of April. It's also right by the 50 SMA on this 4-hour chart. If we get the clear-cut pop, let's say on this 5-day chart, which now after hours, it looks like this thing did get a pop. What's going on here? This is starting to move up after market hours, which is great. Now if we get that to continue towards 47 plus, now we're talking 50 plus is where this could be going next. In fact, I think mid 50s heading into the summer is where LUV could be going. So I don't have any at this point, guys. I don't have any individual airline investments, and I've never really invested like the bank stocks, like I mentioned, guys. I've had very few investments. Well, very few bank investments. I've had 0 airline investments, but I'm looking at LUV seriously right now, heading into summer, and I don't want to say it as an investment, more as kind of like a midterm trade. I'm thinking maybe 3-6 months out with this. So, LUV is one that I might buy, and I might even buy Jets instead, GETS, or JETS rather, which is an ETF. It's an ETF that is obviously a basket of airline stocks. I might just do that, which is a little bit more diversified. My return might not be as great as if it would be if I bought, let's say, maybe just LUV or AAL, but I still get exposure to the space, which at the end of the day is what I want over the next quarter to maybe. I haven't completely decided yet, but I'm thinking about it, right? So that's it. I hope you all enjoyed the video, got some insight. If you did, hit the like button, subscribe, drop me a comment. I appreciate you guys. Enjoy my Patreon. That's linked down below. And don't forget to get your free money from Moomoo, up to 6 free stocks, each of which could be valued all the way up to $3,500. Just use that link down below, or go to stocksurfest.com/Moomoo. Deposit at least $100, and boom, you get your free money. And with that being said, guys, cheers. I'll catch you all in the next video. And I appreciate you guys watching as always. Peace out.